A very good morning to my lovely students. Dear students, we are going to learn today the bad debts. Please turn to page number 189 of Catherine Cookham book. So, what is the debt actually? Debt is simply an amount of money borrowed by one party to the another party. So we have two kinds of the debt. One is that the good debt, another one is the bad debt. So good debt is the example is that whatever you sold out the goods on credit and later on your clients or your customers are paying money on time. So you consider these accounts as a good debt accounts. So you can we can get the example for this. If we sell goods on credit and the customers are paying money on time, then this entry will be recorded. Debit will be the cash, or if we receive the check, then we record as debit as bank, and the credit entry will be the name of the debtor. Suppose Sasha sold the goods on credit to John 1000, and John is a good customer and he's by pay the money by check on time. So if we collected the check, so we record definitely in the account of bank. And the debit will be as bank and the credit entry will be for John. So this is the example for the good debt. Now we're coming for the bad debt. So bad debt is that whenever we have to collect the money from our clients and after several reminders, the clients are not going to pay money. The reasons can be several. Maybe they don't have the money, maybe they are bankrupted, or maybe they are not willing to pay the money to our business. So bad debts whenever will happen, okay, we need to record the entry because it's impossible for us to collect the money. So whenever we are going to transfer their accounts into the bad debts, we have no hope. So the entries will be recorded here as the debit will be as bad debts and the credit will be as the debtors account. The credit entry will remain same. There is no changing will happen, but only the entry will be factored here is the bad debts because earlier we have collected the money, but here we don't collect the money. So earlier we transferred the money to an asset account as cash or bank, but now here we are going to charge as an expense or as a loss. So any expense or loss will be recorded on the debit side. Now coming to the question. So during the year, a company sold goods for 2,000 to Mr. Lee, 1,500 to Mr. Wong, and 300 to Mr. Wu. Lee and Wong paid the company what 800 and 1,000 on time, and later on, Mr. Wong and Wu became bankrupt. It's impossible for the company to collect these debts, so the company decided to write these off as bad debts. So how we are going to record the entries? So when we sold the goods, all the entries will be recorded on the debit side of each customer's account as sales. You can see here sales 2000, sales 1500, sales 300. Later on, Mr. Lee and Mr. Wong paid the money by check. So we record the entry on the credit side 800 and Wong also recorded 1000 on the credit side. But later on, Wong and Wu became as bankrupt. So we have no hope to collect the money from them. So we transfer whatever the difference, whatever the balance is there to bad debts account. So 500 will be recorded on the credit side as bad debts in each account and Mr. Wu account will be as 300. So 300 you can see here the debit side of bad debts account and 500 on the debit side. So the whole amount we are going to charge to the income statement at the end of the year. So now the question is that what will happen with Mr. Lee? Mr. Lee is still a good customer and he is still willing to pay the money. So we will put there as balance carried forward. All right. Thank you so much for watching this video. Take care.